transactions that happen through cash. It can be called as cash sales or cash purchases. Unrecorded purchases means some of the purchases made paying them in cash may not be recorded in the books of accounts. Every voucher will have a number, so if anything or any voucher or any documents is missing, it is easy to detect the risk. It is automatically records every cash sales that has happened and prints receipts. Hello everyone, I am Niklavati S, Faculty of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. I welcome you all for this fourth session on the subject Principles and Practice of Auditing. In today's session, let us discuss about the next topic, that is the internal control regarding the cash sales and cash purchases. So in simple terms, we can say that any purchases or sale of transactions that happen through cash, it can be called as cash sales or cash purchases. So here we will study why internal control is important, particularly for cash sales and cash purchases. Let us discuss about cash sales. Cash sales refer to those transactions where goods or services are sold. So generally a sale is a transaction where goods are sold, goods or services are sold and payment is received in cash. And if for that sale payment is received in cash, then it is called as cash sales. So either via credit or debit cards. So these transactions are important because they involve the direct handling of cash. These are called as cash sales or cash purchases, and these are important because they involve the handling of cash and making them vulnerable to fraud or misstatement. So there are chances that in cash sales the number of frauds or fraudulent activities or manipulation may happen high. Some of the key risks involved in cash sales includes misappropriation of cash. So here, say for example, the employee may pocket the money received through a sale without recording in the actual books, or it may have the risk of under-reporting sales. Sometimes the sale which is made may not be recorded in the same value. The less number of units that are sold may be recorded instead of actual units that are sold. Say for example, if 1000 units of products are sold, the employee may record only 800 units or 600 units sold. So that is under-reporting of sales, and these people or employees may misuse the amount that is received through sales. Sometimes there may be fictitious transactions. That means fake cash sales may be recorded in order to hide the theft of inventory or something. Then moving on to the internal control for cash sales. So why internal control is necessity here? Internal control, as we all know, it is the methods or the policies or procedures that the management uses in order to have control on the activities in the organization. So here they need to have control regarding the activities or transactions that happening with related to the cash sales. So how we can achieve proper internal control for cash sales means by segregating duties, use of cash registers, daily cash reconciliation and deposit of cash. And to discuss one by one, first segregation of duties. Here segregation of duties means dividing and assigning the different tasks that are involved in a particular transaction to different kinds of employees. Say for example, a person who receives the cash should not be the same person who records the sale or prepares that cash account. So this kind of segregation of duty ensures that one person is not involved throughout the entire transaction from start to finish, and there are no scope for manipulating the accounts or in terms of sales. For example, in a retail store, the cashier receives the cash and the sales manager, he prepares the sales report and counts the cash received at the end of the day. this will avoid the cashier, to go for misappropriation of the cash. And internal control for cash sales can be achieved through using of cash registers. So using of cash registers where it is automatically records every cash sales that has happened and prints receipts. So in this way also they can reduce the risk or misappropriation or manipulation in the transactions or the sales that may happen. Then daily cash reconciliation. So daily cash reconciliation here refers to verifying the amount of cash received through sale as well as with the actual documents or vouchers that are available, or checking the cash that is there in the hand and also what is the amount of cash that is there in the bank, whether both is according to the sales or not. So cash received should be matched with the sales records. Say for example, a cashier at a bakery may calculate the actual cash received at the end of the day with the sales that are recorded in the system. So if there are any discrepancies found, then the supervisor may try to detect what is the cause for that difference or discrepancy. Then a proper internal control can be achieved even through depositing of cash. That means daily whatever the cash that is received, that can be deposited in a bank, so that delaying the deposition will give space to or scope for the losses or theft to happen. Say for example, a restaurant manager makes sure that whatever the cash that is received at the end of the day, he may deposit it to the bank, so that the loss of or manipulation or any kind of misappropriation of cash that can be done at the time of storing the cash in hand, that may be avoided. Moving on to the cash purchases. Cash purchases involve acquiring goods or services and paying for them in cash rather than on credit. So here we are buying a good or a service by paying them in cash rather than buying on credit. So these transactions carry a high risk because cash is used directly, making it difficult to trace without proper records. So if the cash is handed over in hand, it is difficult to maintain the records. So here it gives rise to high risk in the financial transactions or recording of those cash purchases. Some of the key risks involved in the cash purchases include unrecorded purchases, inflated purchase prices, and fictitious purchases. So here unrecorded purchases means some of the purchases made paying them in cash may not be recorded in the books of accounts, which again leads to misstatements of the financial reports. Then inflated purchase price, here showing the price of the purchase in a higher amount. Say for example, for a product whose price was 20,000, here the employee or the accountant may record it as 25,000. So that 5,000 cash can be manipulated or misused. Then sometimes there may be fictitious purchases. So fake purchases may be recorded sometimes to siphon off the cash from the business. Moving on to internal control for cash purchases. So how to achieve proper controlling on the cash purchases to avoid the risk that may happen in cash purchases. So these methods includes authorization of purchases, pre-numbered purchase vouchers, supplier receipts, periodic review, and limits on cash purchases. So let us see one by one. Authorization of purchases. So all cash purchases should require authorization from the senior managers or the senior officers before it is handled in cash. When there is proper authorization, it helps to ensure the validity of a transaction. Say for example, before buying supplies for a small office, the procurement officer may seek the approval of senior or office manager. So then office manager goes through that list of supplies and it thinks whether that things are needed in the office or not, then approves it. This method helps to reduce the fictitious cash purchases that may happen. Then Pre-numbered purchase vouchers. So here a voucher is a document that details regarding the purchase. So here using pre-numbered purchasing vouchers can avoid some of the unrecorded purchases that may happen. So that every voucher will have a number. So if anything or any voucher or any documents is missing, it is easy to detect the risk. Hence, using pre-numbered purchase vouchers helps to keep the track and record all the transactions. Then we have is supplier receipts. For every cash purchase, a receipt from the supplier should be obtained. So it helps to keep the records and documents properly, as well as it helps at the time of auditing. For example, an office person buys supplies for the office and gets a receipt from the supplier, and he attaches that receipt to the purchase voucher and submit to the accounts department for record keeping. Then a proper internal control may also involve periodic review. So here periodic review means a review or supervision may be done within whether to check whether the transactions are recorded properly or not periodically on a regular basis. So this helps to identify if there are any unrecorded transactions or any kind of unusual trends that is happening. It can be detected easily and any kind of risk can be found out. Then one of the method in order to reduce the risk that may be happening in the cash purchases is setting the limits. So setting the limit up to a certain amount for the cash purchases or those transactions which can be handled through cash also reduces the risk or the manipulation of the cash that may happen. Say for example, they can set the limit up to 5 lakh. So if any transactions more than 5 lakhs may be done through checks or direct account transactions. Say for example, a retail store in which any cash purchases like made or any purchases made more than 10,000 must pay via bank transfer. So setting these kinds of methods or techniques will help to reduce the manipulation or misappropriation that may happen in cash purchases and cash sales. So to conclude, cash purchases and cash sales are highly vulnerable to risk such as fraud and misappropriation. It is important to have a strong controlling method or internal control system in the organization to check or review or whatever the cash purchases and cash sales that are happening in the business. For auditors, assessing the internal control techniques that are used for cash sales and cash purchases are very crucial, as this ensures that there are less number of errors in the financial statements. This was all regarding the internal control of cash sales and cash purchases. Hope you all have understood. Thank you.